What if I told you the biggest XRP story of the year isn't happening on crypto Twitter, isn't making mainstream headlines, and isn't even showing up in the price? What if while retail investors are staring at red candles and debating the next short-term move, some of the most powerful financial institutions on earth are quietly building the infrastructure that could bring XRP directly into the heart of Wall Street? Most people won't notice it until it's obvious. By then, the conversation will be completely different. Because right now, behind closed doors, inside clearing systems, institutional networks, and trillion-dollar financial pipelines, something is changing. And the strangest part? Almost nobody is watching it happen. Welcome back to XRP Matrix. Today we're breaking down why XRP may be quietly entering Wall Street while the majority of investors remain focused on all the wrong signals. If you clicked this video expecting another prediction about tomorrow's price action, this may not be the video you expected. Because today's discussion isn't really about price, it's about positioning. It's about understanding what is happening beneath the surface while the market remains distracted by noise. One of the biggest mistakes investors make is assuming that price always reflects reality in real time. History shows the opposite. Some of the largest financial opportunities emerged during periods when public attention was at its lowest and institutional interest was quietly increasing behind the scenes. That's what makes the current XRP story so fascinating. While many traders are reacting emotionally to every move on the chart, the underlying infrastructure surrounding Ripple and XRP appears to be evolving in ways that deserve far more attention than a single day's market action. Think back to the major crypto events that dominated headlines over the last several years. Every major market decline seemed to come attached to a clear narrative. There was always a reason people could point to. An exchange collapsed, a project failed, a lawsuit appeared, a regulator stepped in. Investors could identify the source of the fear, but the environment surrounding XRP today feels very different. There isn't a massive new legal battle dominating the conversation. There isn't a major exchange failure driving panic. There isn't a single catastrophic event explaining why so many people remain hesitant. Instead, what we're seeing is something far more subtle. A market filled with uncertainty, where many participants have become tired, impatient, and increasingly focused on short-term fluctuations rather than long-term developments. And historically, that combination has often created the perfect conditions for major structural shifts to go unnoticed. One of the most important lessons in investing is understanding the difference between fear and confusion. Fear usually comes from a known threat. Confusion comes from not knowing what is happening at all. And confusion often causes investors to make decisions they later regret. When people don't have a clear explanation for market behavior, they naturally create their own stories. They assume the worst. They convince themselves that others possess information they don't have. They begin interpreting silence as a warning sign. But markets don't always move based on dramatic headlines. Sometimes prices reflect liquidity conditions, positioning changes, profit-taking, macroeconomic pressures, or simple cycles of accumulation and distribution. That's why it's dangerous to assume that a quiet market automatically means a broken thesis. Sometimes the biggest developments occur during periods when almost nobody is paying attention. When we zoom out and look at XRP from a broader perspective, a very different picture begins to emerge. The long-term chart doesn't look like an asset that has disappeared from relevance. Instead, it resembles an asset that has spent years building a foundation while waiting for the broader market structure around it to mature. Markets rarely move in straight lines. They advance, consolidate, retrace, and rebuild. That cycle repeats across every asset class in history. What matters isn't just where price sits today. What matters is whether the fundamental reasons people became interested in the asset still exist. And when we examine XRP through that lens, many of the original themes that attracted institutional attention remain intact. Fast settlement, cross-border efficiency, liquidity solutions, and integration with financial infrastructure continue to be discussed at levels far beyond what most retail investors realize. Now let's talk about something that deserves far more attention than it receives. While much of the crypto community remains focused on daily price action, developments inside traditional finance continue moving forward. One of the organizations sitting at the center of global financial infrastructure is the Depository Trust and Clearing Corporation, better known as the DTCC. This isn't a flashy company. It doesn't dominate social media discussions. Yet it plays an enormous role in the movement and settlement of financial assets around the world. The scale of transactions connected to this infrastructure reaches into the trillions of dollars. That's why many observers paid close attention when Ripple-related institutional services began appearing alongside some of the largest names in global finance. These aren't random companies. These are organizations that have shaped financial markets for generations. The significance isn't simply that a name appeared on a list. The significance is the company that XRP-related infrastructure is increasingly keeping. When discussions involve institutions like major global banks, asset managers, clearing organizations, and settlement providers, it signals that conversations are occurring at levels far beyond retail speculation. Traditional finance doesn't move quickly. Large institutions don't rebuild systems overnight. They move carefully, methodically, and often years before the public notices what they're doing. By the time a trend becomes obvious to everyone, much of the groundwork has already been completed. That's why paying attention to infrastructure matters. Infrastructure tells you where serious capital believes the future may be heading long before headlines begin celebrating the results. Another trend quietly transforming Wall Street is tokenization. The word sounds technical, but the concept is actually simple. It involves bringing real-world assets onto blockchain-based systems so transactions can occur faster, cheaper, and more efficiently. Instead of relying on outdated settlement processes that can take days, tokenized systems can potentially settle transactions in seconds. This isn't merely a crypto industry dream anymore. Some of the largest financial institutions in the world are actively researching, testing, and developing tokenization strategies. Asset managers, banks, financial technology firms, and market infrastructure providers all recognize the potential impact. And whenever those conversations occur, Ripple continues appearing in places where traditional finance and blockchain technology intersect. That doesn't guarantee any particular outcome, but it certainly suggests XRP remains part of discussions that many investors fail to notice. What makes this especially interesting is the contrast between public sentiment and institutional activity. Retail investors often react to visible signals. They respond to headlines, price movements, and social media trends. Institutions operate differently. They focus on infrastructure, compliance, scalability, efficiency, and long-term strategic positioning. Those priorities don't always create immediate price reactions. In fact, there are often long periods where institutional preparation advances quietly, while public attention remains elsewhere. That's why the current environment feels so unusual. On one side, many market participants are frustrated by slow price performance. On the other side, evidence continues emerging that traditional financial systems are exploring technologies connected to blockchain settlement, tokenization, and cross-border value transfer. If this story were only about XRP, it would already be interesting. But the broader context makes it even more compelling. The financial system itself is changing. For decades, many core processes remained largely unchanged. Settlement cycles were slow. Cross-border transactions were expensive. Intermediaries added friction at every stage. Now technology is creating alternatives. Institutions aren't asking whether modernization will happen. They're asking how quickly they can adapt to it. That distinction matters. When the world's largest financial organizations begin preparing for a new framework, the projects positioned closest to those conversations naturally attract attention. And whether someone is bullish or bearish on XRP, it's difficult to ignore the fact that Ripple continues appearing in discussions connected to financial modernization. One reason many people miss these developments is because being early often feels exactly like being wrong. History is full of examples. Companies that later became industry giants spent years being ignored, criticized, or misunderstood. Investors who recognized long-term shifts early often looked foolish for extended periods before the market eventually caught up. That doesn't mean every idea succeeds. Many don't. But it does mean that public consensus is rarely the best indicator of future outcomes. The crowd typically becomes convinced only after most of the move has already occurred. That's why patient investors focus less on popularity and more on understanding whether the underlying thesis continues strengthening over time. At this point, it's important to remain balanced. None of this guarantees future price appreciation. None of it guarantees institutional adoption on the scale some investors expect. Markets are complex. Competition exists. Regulatory developments matter. Economic conditions influence outcomes. Anyone promising certainty is oversimplifying reality. However, acknowledging uncertainty doesn't mean ignoring evidence. And the evidence suggests that XRP remains connected to conversations involving infrastructure, settlement systems, tokenization, and institutional finance. Those are not insignificant themes. They represent some of the largest trends shaping the future of global markets. Whether those trends ultimately benefit XRP to the degree supporters expect remains to be seen, but dismissing them entirely would be equally short-sighted. So let's return to the question we started with. Is XRP quietly entering Wall Street while most people aren't paying attention? Based on the developments we've discussed today, there is certainly a strong argument that important pieces are falling into place behind the scenes, not through flashy announcements, not through sensational headlines, but through infrastructure, partnerships, institutional discussions, and gradual integration into the systems that move global capital. The market may still be focused on daily volatility, but Wall Street rarely announces its intentions before acting. It builds first and explains later. That's why the silence surrounding XRP may not be a sign that nothing is happening. It may simply be a sign that the most important developments are occurring where few people are looking. And if that's true, the investors paying attention today may understand the story long before the rest of the market finally notices. The biggest takeaway isn't that you should rush out and buy XRP tomorrow. The biggest takeaway is that investors should learn to separate noise from signal. Price can be loud. Headlines can be loud, social media can be loud, but real structural change is often incredibly quiet. And right now, beneath the surface of the crypto market, there are signs that XRP continues positioning itself closer to the institutions, infrastructure, and financial networks that could define the next era of digital finance. Whether that ultimately transforms the asset's future remains unknown. But one thing is becoming increasingly clear. While much of the market is looking elsewhere, XRP may already be taking its first quiet steps onto Wall Street, and by the time everybody is watching, the opportunity to notice it early could already be gone.